We've got an incredibly busy news week, so let's talk about it. Today, pound GDP numbers came out better than expected at 0.5%. Later on today, the Bank of Canada's governor, Tiff Macklem, is set to speak. Looking ahead at our packed news week, tomorrow we have US CPI numbers at 8:30 a.m. Eastern Time. Remember, you can watch TraderNick cover the news event live right here on the A1 Trading channel. Tomorrow, both the governor for the Bank of England and the Reserve Bank of Australia are speaking. And on Wednesday, that might be our biggest news day of them all. We have pound CPI numbers being released, US FOMC data, which means new interest rates, New Zealand GDP numbers, and Australian unemployment rate. Thursday, we have Swiss interest rates, pound interest rates, and euro interest rates. We finish off this week with flash service PMI on Friday for the euro, the pound, and the US. There's a lot to look forward to and a lot to keep up with this week, so be sure to keep coming back to the A1 Trading YouTube channel for all the latest news, numbers, and analysis.
All right, so here we are checking out the Edge Finder. Before we get started, I want to mention, have y'all seen that awesome little box that we have behind me in the set now? That's something that we just picked up recently, and we are actually selling, starting today, the A1 stock box. It's a really cool little thing that you can set up to 5 custom assets to display on the screen. If it's lit up green, it means that it's up on the day so far. If it's red, it means it's down on the day so far. It actually shows real-time price. It's getting updated every couple minutes or so. So you're getting accurate, up-to-date, real-time information for 5 of your favorite assets that automatically rotates through them. And like I mentioned, we are selling them now. So if you want to check it out, we have a link to it in the description down below. Go check out the page and check out the product. It is something that we are super excited to be launching. And yeah, super excited to get out to you guys. But let's go ahead and continue on with this analysis. We're taking a look at the Edge Finder. I want to start in the market heat map and take a look and see how our currency pairs have moved so far today. So US dollar pairs, nothing is really sticking out. USD JPY is our top mover to the upside so far today, but only up 0.5%, where Aussie USD is down 0.65% so far on the day. Indices, again, not a ton of movement. US 30 up 0.65%. In fact, all 3 of our major US indices, the NASDAQ, S&P, and US 30 are up, although the NASDAQ's only up 0.04%, S&P up 0.31%. But I guess moving to the upside is better than the opposite. Whereas our foreign indices, the German 30, UK 100, and JP 225 are down on the day so far. Taking a look over here, I can actually see that oil is our biggest mover to the upside so far today. Here we have like all of our bar graphs showing our major indices as well as our currency pairs. But what we don't have listed are things like oil, USD ZAR. Some of the gold is another one that, let's see, can I spot out gold? XAU USD, where are you? There you are. Oh, it's our biggest mover to the downside, actually, down 0.7%. What this box is it's showing the same data. However, it's showing every single thing that we have listed in the Edge Finder. For example, so we don't have a bar chart for gold, but you can see, or a bar chart for gold or oil, but you can see both of those in these little boxes right here. USO is oil, and it's actually up almost 4% on the day, by far our biggest mover to the upside in the Edge Finder, up 3.94% on the day so far. So that is a massive move to the upside. Gold, on the other hand, is our biggest mover to the downside out of everything. Again, everything that we have listed in the Edge Finder, down 0.7% on the day so far. But moving right along, euro pairs are up on the day so far. Euro Aussie up 0.78%. Same with our pound pairs. Pound pairs are up on the day so far. Pound Aussie up 0.8%. Yen pairs again up on the day so far. GBP JPY up 0.67%. Swiss franc pairs are up for the most part. Aussie CHF down 0.43%. CHF JPY up 0.41%. Our Australian dollar pairs, on the other hand, are down for the most part. Aussie US down 0.65, percent, like we mentioned, and GBP AUD up 0.8%. And same thing here with our New Zealand dollar pairs, mostly shooting towards the downside. NZD USD down 0.5%. GBP NZD up 0.66% on the day so far. So look at oil up there all by himself. Oil is doing amazing today for some reason. So far doing really well today, up 4%. But back in the watch list, let's take a look at some buy and sell signals. I'm going to remove our indices and commodities, and I'm going to remove our neutral scores. And here we go. NZD CAD, USD CAD, NZD USD, CHF JPY, NZD JPY, NZD CHF, Euro JPY are all buys. We have a lot of buys today, two strong buys, USD CAD, NZD CAD. Strong sells still have not changed. GBP NZD, Aussie NZD, Euro NZD are still strong sells. CAD CHF and Aussie CHF are both sells. So CHF JPY would be interesting because I haven't looked at that pair in a very long time. At the start of the week, I do like to take a look at US numbers. So I'm thinking I'm going to take a look at USD CAD just to get an update, refresh our mind on our US dollar numbers. We have important US news events this week, tomorrow being CPI news event and Wednesday being FOMC news events. Be sure to check out the A1 Trading channel. During both of those news events, we will be live streaming both of those news events. So you can watch Trader Nick cover the news event live and hear his analysis, hear his take on what's going on. But yeah, let's get caught up on our US and Canadian dollar numbers. We have a strong buy score of +6. COT data is a score of +2. Retail sentiment, a score of +1. We can see down here in our sentiment section that institutional traders are currently 76.24% long on the US dollar and 23.76% short. Institutional traders favored short on the Canadian dollar, 63.22% short and 36.78% long. And retail traders overall 74% short on the pair as a whole, 26% long. Our seasonality is a score of +1. We can see here that in the month of December, our 10-year average and last 5-year average are just above this neutral line here, meaning that typically speaking, this pair tends to trend pretty well and do fairly well in the month of December. Our last 5-year average is really right on that line, so it's kind of neutral, but our last 10-year average is above the line. However, that has not been the case so far in the current year average. However, there is still time to turn that around. It could shoot towards the upside. We'll see if that happens. Our trend reading is a score of +2. We can take a look back from November 23rd, really maybe say November 25th. We've seen some upward momentum, shot back down a little bit, but then again, went back up higher towards this level of resistance right here and is about to break through that according to our price forecast. So look for this to be forming new highs. Finishing off with our fundamentals, GDP growth and unemployment, both scores of +1, inflation and interest rates, both scores of -1. We can take a look at those fundamental numbers over here. US GDP growth 2.9% compared to Canada's 0.7%. US inflation 7.7% compared to Canada's 6.9%. US unemployment 3.7% compared to Canada's 5.1%. And lastly, interest rates US 4% compared to Canada's 4.25%.
The dollar right now has been on a little bit of a it's trying to find its feet, if you will. In fact, I mean a little bit more than that. It's completely fallen apart from its really indestructible run that we've seen in the majority of 2022. I mean, it's really lost that steam. You can see how beautiful the uptrend was, the trend that was, if you will, right? You had those higher highs, just clean movement to the upside. If you guys were watching the stream throughout most of the year, then you know that this one's been a really good one for us. We made a lot of money going long the dollar. It's been an incredible trade. And in more recent times, we've flipped. We've flipped not necessarily to actively shorting the dollar per se, but not nearly as interested in being long. I have not taken any long trades on the dollar in a while, over a month at least. And the perspective there with that is, of course, that with the dollar essentially rolling over, the reasoning for that, fundamentally wise, is that CPI, the inflation measurement tool that the Fed tracks very closely, started to curve. We saw inflation come down in the United States, which of course is a leading indicator to whether or not interest rates get rate hiked at a faster rate or not. And so we've seen inflation kind of curb. PPI numbers were up a little bit last week, but here's something that is really, really important about this week. This week, we have decisions on interest rates. Not necessarily a matter of whether or not we are going to raise interest rates, but a question of, are we going to see interest rates in the US raised by 50 basis points or 75 basis points? Of course, a 75 basis point rate hike could put the dollar back on a trajectory to the upside. Whereas a 50 basis point standpoint, which is what a lot of the market is expecting, could continue actually the decline of the dollar after this major pump. I hope that made sense. That was a lot of stuff here to preface this week. It is a very, very important week for the currency market and for markets in general. And so what I'm going to do here is we're going to step through some charts. We're going to take a look at some trade setups and ideas and things and my perspective going into this week. Please feel free to chime in the chat as we go along. But here's your 4-hour view of the dollar. And you can see structurally, we look quite bearish. And if you know something about my streams or you know something about my trading style, then you know I am not a super predictive trader, meaning I don't forecast exactly what I think the market's going to do. I find that to be a very tricky game to play. I tend to be more of a trend follower. And so trend following means basically you follow what the market's doing. You don't try and anticipate what the market's going to do all the time. So when we look at the dollar, right, you can kind of see we're starting to already see some consolidation going into this week. I believe it is Wednesday. Let me double check my facts here. We'll go to forexfactory.com and we'll take a look at this together. So tomorrow we have CPI. So inflation numbers coming out at 7.3% forecasted. This is a big decline from that 7.7 from previous, which was already a beat, by the way. We beat on inflation last time. The question is, will we beat again? And if that so happens to occur, the dollar likely will fall continuously, right? Or continue to fall. And then, of course, if we continue on to the next day, we have another huge loaded question. The forecast right now is a 50 basis point rate hike from the previous at 4%. Question is, are we going to go up to 4.5 or are we going to come out at 4.75? This is the question that the market's going to see. And so be ready because Tuesday is likely to be a big spike. This is going to be a huge indicator of probabilities of what's going to happen on Wednesday. Now, again, you might be like, Nick, what is all this jargon? If you're new to my streams, then you might not know already that we do a lot of fundamental and technical analysis on my stream and in my trading content. I try and mix the two because they're both very, very important. I think that, fundamentals allow you to find direction and technicals allow you to enter and exit more precisely.
Make sure you guys check out the links in the description if you need broker recommendations, access to our free Discord, or want to chat with us on Telegram. If you're interested in our trading software, the Edge Finder, you can find that in the description as well. Thanks for watching.